ICICI Lombard, company has reported a 68% jump in net profit while commission ratio saw a spike. We spoke to the management on their quarter. Listen in.
Let me just put this in context. So again, if you look at from an ICICI Lombard standpoint, what we have largely spoken about is to continue to drive profitable growth as a theme, and that is what we have kind of stayed on across various years of operations in terms of how we have run businesses at. So that's the same thing that's kind of helping us. So for example, if you look at a couple of years back, when the market was very, very aggressive, obviously we took a guarded slash cautious approach to writing risks. And therefore, to that extent, I think we have been able to possibly see a downward slope in the overall combined ratios for ICICI Lombard. And in that context is how you should look at even the current quarter slash 9-month numbers. So pretty much on track in terms of the thought process or the gliding path that we have spoken maybe almost about 4 years back in terms of where do we want to see the combined ratios for ICICI Lombard play out at. The factors, I think clearly it's a combination of, I would say 3 or 4 elements. So one, maybe let me start at the macro level, which is, I think the regulatory environment has been very, very enabling, and therefore to that extent, that aids the market at large, and of course for companies who are very, very careful in terms of how they want to kind of ride the risk set. So hence, I think we have had a favorable regulatory environment that's kind of aided us in terms of the outcomes that one has seen. But when you have to come to specifics, I think the combined ratio improvement, what you see in terms of the gliding numbers, has kind of come through our shared focus on continuing to drive profitable growth in terms of top line. And equally, I think we have taken a lot of initiatives in terms of claims management. And finally, I would say at the end of the day, what we keep looking for is to see how we can be far more efficient in terms of operations. And hence, a combination of all the 3 factors are where they are in terms of the outcome on combined. I think the only caveat that I would put is increasingly we are seeing for the industry a lot of catastrophic events. And that's very difficult to kind of predict. And therefore, to that extent, in terms of outcomes, I think at different quarters, depending on how these events play out, the combined ratio for the industry and even for ICICI Lombard could take shape appropriately.
Okay, so at this point, you know, your combined ratio is at 102.7. Would that be only bettered going forward? Is that the outlook, the way you see it?
So let me just again put this in context. I think the reported combined of 102.7 that you're referring to is, let's say, for quarter 3. Now, that obviously has got a slight nuance. A nuance in the context of, again, a regulatory change. So effectively, 1st October, all long-term products, as per the regulatory stipulations, have moved to recognition of revenue or premiums over the contract period. And similarly, whatever acquisition cost or cost of sourcing that companies incurred, they will also be allowed to be amortized over the contract period. Again, as I said, a favorable enabling regulatory environment change over a longer term perspective. So if I were to kind of, so the combined of 102.7 for this quarter 3 includes the effect of that particular change. If I were to take that effect and look at it on a business as usual basis, the combined ratio would have got reported at 102.3%. So it has had a 0.4% impact on the overall combined. But having said that, to your point on how do we see the road ahead, I think pretty much as I talked about, I think what we are seeing is clearly a declining combined ratio trajectory for ICICI Lombard. And going forward, if the industry kind of continues to respond favorably, while there have been, if you look at the half year, of course, that we have seen an adverse change in the overall combined for the market. But assuming the market remains sensible, I think definitely there is no reason why we should not be able to see an improvement in combined from the current numbers as well.